Hi, my name is Joe Polyak with Keller Williams Real Estate, and again I'm joined by Roger Hayden, local farmers insurance agent.
Very good. You got that right, Joe. Thanks.
Excellent. And just a quick disclaimer: I want you to be rest assured that it looks like this is a different day from the previous videos that we've done. However, we just changed clothes. I just actually only took off my jacket and rolled up my sleeves. Roger changed his shirt.
We did this in private.
Very nice. It can get a little hot in here, talking all these facts and figures.
Good.
Anyways, so what did we do last? We talked about the home upgrades required after a building. Okay, so today we're going to talk about, this is a continuation of our multi-part series. I don't even know which part we're in right now. This is a continuation of our multi-part series about insurance as it relates to real estate. And so today we're going to talk about earthquake insurance. A lot of people always ask me about it, and we know that in this area might be a little bit more prone to earthquakes than other areas. And so we want to get a little bit more information about what earthquake insurance is all about.
Great.
Take it away, Roger.
Sure. Hey, Joe, thanks for inviting me back today. I really appreciate the opportunity to speak with you about things that can help your clients as they're purchasing or selling and working with you. And I know we had mentioned that one of the topics that comes up sometimes when people are buying a home is, do I need earthquake insurance? Should I have earthquake insurance? Is my home insurance going to cover earthquake damage if it occurs to my home? These are some very popular questions that come up. And I think probably the first thing to be aware of for you and your clients is that most home policies in California that I'm aware of do not include coverage for damage due to earthquake if earthquake is the cause of damage to the home. Okay? And the reason I say it that way is because another question that comes up is, well, what happens if the earthquake causes the fire? Okay? And the fire is the cause of loss. Okay. In that situation, most standard homeowners policies, again, always confirm this with your carrier, but most standard home policies will cover the loss if the fire is the cause of damage. So even if the earthquake, if the earthquake caused the fire, if the fire is what destroyed the home, then your home policy is going to cover it. However, if the home is damaged due to earth movement, the earth moving and shaking, then that would actually require earthquake insurance.
Okay. I didn't know that. So that means that if you have a house that's on a slab, built on a slab, and an earthquake just goes right through the middle of your house, and then the slab that it's on, that's concrete slab that a lot of homes are built on in our area, like Eichler style homes, for example, are built on a solid concrete piece of slab. If an earthquake just goes right through it and it cracks in the middle and cracks your house in half, then you need earthquake coverage for that.
Yeah, otherwise you're out of luck. Pretty much. Big problem.
It's worse than out of luck.
So, and again, where earthquake becomes important, as you mentioned, one of your areas of specialty, and also where I'm located, is the San Francisco Bay Area. Of course, we've got the San Andreas Fault running right through here, the Hayward Fault running right through here, major fault areas. And so we are there's no doubt about it, you and your clients and a lot of my clients were located in an earthquake-prone area. And so it's important to know that, again, although most lenders at this time in 2019 do not require earthquake coverage as a condition of a loan, nonetheless, it's something that your clients and my clients need to be aware of. A little known fact, maybe not a little known, but 13% of homeowners in California carry earthquake coverage. Okay. Now, admittedly, that's statewide. Okay, not necessarily just here in the Bay Area, but 13% is a relatively low number.
Yeah, considering, I didn't even know it was that many.
Yeah, considering the risk that that our homes and clients face here in the Bay Area. Yeah. And most people, not all, but most people write their coverage through what's called the California Earthquake Authority. Okay, it's sometimes abbreviated as CEA, California Earthquake Authority. And by the way, if your clients are interested, they have an excellent website that you can get information on. It's at www.earthquakeauthority.com. They've got seismic maps. They talk about their coverage. The coverage is there, and you can even price out earthquake insurance right there by yourself.
I'm going to make sure that link is in the description later so people can.
Yeah, good idea. I oftentimes refer clients there. You can price them out, and whatever price you see there is what your insurance company is going to sell it to you for.
Okay.
Okay, so there's no markup. That's the pricing for it.
Okay.
The one thing I'd leave to kind of keep this relatively short today, we've talked about the fact that we're in an earthquake area, hazard area. We've talked about the fact that most earthquake coverage is offered through the California Earthquake Authority. The other thing then comes in terms of the coverage of an earthquake policy. And one of the biggest areas of not necessarily confusion, but I like to clarify for customers with a CEA policy for homeowners is how the deductible on a CEA policy works. Okay, so typically on a home you think of a dollar amount, right, for the deductible, $1,000, $5,000. On a CEA policy, the deductible is a percent amount. Okay, and it's a percent amount of the entire coverage for the home. Remember in one of your earlier videos we talked about this coverage A or dwelling amount, how much the home is insured for? Right, so when you have a CEA policy, that coverage amount on the earthquake policy has to match the home policy.
Okay.
So if your home is insured for $600,000, okay, the earthquake policy also has to be $600,000.
Okay.
And then your deductible on that policy ranges, you can get it currently in 5% increments between 5% and 25%. So 5%, 10%, 15%, etc.
And your premium is adjusted accordingly.
Exactly. Obviously, the higher the deductible, the lower the cost of the home insurance. Okay. So where this deductible comes into play, let's keep the math simple since I know it's a challenge for you. Let's say you've got a 10% deductible.
Okay.
Okay. $600,000 to rebuild the home.
Okay.
That's your earthquake policy also. By law, it has to match.
Okay.
10% deductible. I have a $60,000 deductible. Okay, so here's the example. A lot of times when you think of a deductible, you think, okay, that's the amount I have to pay first, right? Before, so if I have an auto claim, I've got a deductible, I've got to pay a certain amount for the repairs and the insurance. Yeah, exactly. So earthquake, the deductible is the same, but sometimes people, it helps if I clarify how this deductible works. 10% deductible, a small minor quake did $40,000 worth of damage to your home. Not a small amount, but in earthquake standards, that's small.
Yes.
You have a $60,000 deductible. Joe, here's your math. How much does that earthquake policy pay out?
Well, $40,000. You have 10% deductible, so that is going to be $36,000.
No, remember the deductible is calculated on the entire home amount. Okay. So I've got a home that's insured for $600,000, right? 10% deductible would be $60,000.
So you're not covered at all.
So exactly, on a $40,000 loss, I've collected zero.
Okay.
Okay. Now let's look at another example.
Okay.
Let's say we have a major quake on the Hayward Fault.
Okay.
Okay. And on your $600,000 to rebuild home now, it's caused $200,000 worth of damage. You know, the foundation's been damaged, part of one of the walls has fallen off, etc. $200,000 worth of loss. We have a $60,000 deductible. How much? Okay, Joe, here's your second chance. How much is that earthquake policy going to pay out?
And it's $200,000, $140,000.
Exactly, exactly. So in this case, the $60,000 loss, my earthquake policy has paid out $140,000. Now, and here's the key thing: you yourself didn't have to pay out $60,000. Right, to collect the $140,000. The earthquake policy is going to pay out through the CEA $140,000. Okay. Now you're short $60,000. Right? We acknowledge that.
Yes.
But here's the important thing: you still have $140,000 that you can do major damage repairs on your home. Okay.
Yes.
So maybe everything doesn't get repaired up front, but you've got a big pool of money that you can do repairs with, and your neighbor that didn't have an earthquake coverage, guess how much they have to work with?
Nothing.
Exactly.
Yeah,
exactly.
Yeah.
Exactly. And sometimes sometimes people think, well, the federal government will come in with FEMA and things like that. But what a lot of people don't realize is after natural disasters, you know, the hurricanes that we have down south, FEMA grants are usually very small, only a few $1,000s, and most of the aid that they provide is through Small Business Administration and their low interest loans, which have to be paid back. So anyway, this ran a little bit long today, but I know you had questions about earthquake coverage, and so no, it's not required, but if you live in an earthquake area, you might want to think about it, because although the deductibles can be high, little losses it's not going to cover, but if something major happens and you have a $3 million home, or no, I'm sorry, we said a $1.7 million home, and we're figuring it costs maybe, as an example, hypothetically, $600,000 to rebuild. This could make a big difference in terms of preventing a financial disaster for you and your family.
Perfect.
So,
thank you so much, Roger. I appreciate it.
Thanks for your time, Joe.
Thank you. Again, my name is Joe Polyak with Keller Williams Real Estate. You know where you can reach me. This is Roger Hayden, a local farmers insurance agent. And our contact info can be found somewhere plastered there on the video. Thanks again.